Thank you for watching this presentation, which is called Common Insurance Terminology. This presentation will introduce and explain some common insurance terminology that will be useful when working with dental insurance. By understanding this terminology, you will be able to process insurance with ease. The following list of insurance terms is not a 100% comprehensive list, but they are some of the most common. So let's get started. Allowable fee. Each insurance company has a set fee for each procedure code. This fee is usually lower than your clinic's fee. The insurance company will calculate all of their benefits off of their allowable fee. If you are in network with the insurance company, you will be required to write off that difference. But if you are not in network, the patient would be responsible for the difference. Attachments. This is supporting information that an insurance company may require before they will consider a procedure for payment. They need these items, which could be x-rays or perio charts, to determine if the treatment was necessary. In your dental software, you can attach and send these items electronically. The birthday rule. This comes into play when a dependent is covered under two dental plans. To determine which plan will be the primary insurance plan, the subscriber whose birthday comes earliest in the year will be considered primary. By having this rule, it makes it very easy for all parties to determine who will be the primary insurance. Claim. The form used to submit procedures to insurance for payment. Nowadays, most insurance claims are sent electronically, but most companies will still accept faxed or mailed claims. The purpose of the insurance claim is to let the insurance company know the who, what, when, where, and why of a patient's visit. Coinsurance. This is the amount that the patient will be responsible for after insurance has paid their percentage. This amount is usually estimated by the dental office, and the patient pays this amount on the day of service. Coordination of benefits. When there are two insurance companies involved in a claim, the sharing of payment and coverage information is called the coordination of benefits. Usually, the secondary insurance requires the explanation of benefits from the primary insurance before they will pay on the claim. Coverage table. The coverage table explains how much the insurance plan will pay, which is usually a certain percentage based on procedure type. A standard dental plan would cover 100% of diagnostic and preventative, 80% of basic treatment like fillings and periodontal, and 50% of major treatment like crowns and root canals. The coverage table will also tell you what procedures the deductible applies to. Deductible. This is the amount the patient has to pay for certain benefits to be covered. This is typically a yearly deductible, and diagnostic and preventative don't usually apply. After the deductible is satisfied, the covered amount is then calculated. Downgrade. If a submitted code isn't covered under an insurance plan, the code can be downgraded to a different code that is covered. A great example is posterior composites. Insurance companies typically consider these to be a cosmetic decision, so they will downgrade their coverage to an amalgam filling, which results in a larger out-of-pocket expense for the patient. Explanation of benefits, also referred to as an EOB. This document comes with the payment. The EOB shows what was submitted and what the insurance company paid for. It also shows if a deductible was applied and what the patient responsibility is. You need to keep a physical or digital copy of all EOBs. Frequency. The frequency tells you how often a patient can have certain procedures covered. The frequency is usually based on benefit years. You can see in the example that cleanings are covered twice per year and a full mouth x-ray is covered only one time every 5 years. Missing tooth clause. Not all plans have this clause, but it is extremely important to know for each plan that you are working with. This is an insurance company's version of a pre-existing condition. If a tooth is already missing from a subscriber's mouth when their policy takes effect, no treatment would be covered that pertains to that tooth location. A common procedure that is affected by a missing tooth clause is a bridge, which you can see in this example. Network. All you need to know is if you are in network or out of network with an insurance company. If you are in network, you have contractually agreed to accept their fee schedule. If there is a difference in fees, the clinic takes a write-off, which benefits the patient. Clinics benefit from being in network because it helps attract patients. If you are out of network, you can still submit insurance claims, but any difference in fees gets passed on to the patient. Waiting period. A waiting period is a way that insurance companies can protect themselves from having to pay for major procedures right away. Waiting periods typically last for 12 months from the effective date of the policy. For new patients, you always want to be aware of waiting periods and make sure the whole team knows for treatment planning purposes. Write-off. A write-off is an adjustment taken by a provider. When dealing with insurance, write-offs are taken when you are in network with an insurance company and there is a difference in fees. Yearly max. Each plan has a yearly maximum that the insurance company will pay. This is usually an individual amount, but some also have a family amount. Diagnostic and preventative don't normally count towards this maximum, but it is something you want to check on when verifying insurance.